Welcome back. This is Jacob Milliken, owner of 9M Investments. Today I'm going through March's private performance, the private investments that we use with our clients. So just kind of give you a quick recap of the investments that we use currently. We use a couple different REITs, Blackstone's REIT, Nuveen's Global Cities REIT, a couple different private credit funds, Blackstone's private credit, Carlyle's tactical credit, a couple different private equity funds, iDirect private market fund, and then BlackRock's private investment fund. And then new to the party is Priority Income Fund from Prospect Capital. So go through those performance for March and kind of introduce you to the newest fund to the family. So as always, when we start talking about private investments, it's always related to what did the public markets do? And so over the last 5 months, public markets have been completely strong. So S&P 500, NASDAQ 100, really, really big months in the month of March. Again, still up over almost 3% for NASDAQ, almost 5% for S&P 500. Although the aggregate bond market has still been going down, and those yields, even though with interest rates higher, a little bit higher, the losses going into that over the last 3 months, or the first 3 months of the year, and kind of everything else that's going on in the world has seemed to affect those bond prices. And that's where those two private credit funds and our newest fund through Prospect Capital really make up that difference. So let's jump into the private equity funds first. As of this video, I still don't have iDirect's numbers for March yet, although BlackRock's fund came in at 1.05% in March. Again, pretty strong month. This fund, again, is focused primarily on direct investments, also has a sleeve within it that's considered venture capital. So a little bit more exposure as interest rates are higher, that typically venture capital is going to struggle in that environment a little bit. But if you can place investments within that environment, looking out into the future, those tend to be the ones that are going to be the biggest movers. You're kind of buying in at the bottom there. So looking forward to see what that looks like moving forward. Again, within private equity, it's really about the outperformance of the S&P 500, but over the long term, looking at over a market cycles. And so have all the confidence in the world that these two particular funds will continue to outperform in that sector. Within the private real estate, BREIT and from Blackstone, and then again Nuveen from the Global City REITs from Nuveen. BlackRock's fund has done pretty well so far this year. Nuveen is kind of moving sideways a little bit, but again, long-term investments, I want the non-correlation from these investments over the long term. Markets move up, down, sideways. The private real estate, you're not really affected by that one way or the other. It's all about kind of what's going on in the economy, the sectors within it, where you're buying it. And you remember, with private real estate, you actually own the underlying investment. So lots of focus on multifamily homes, industrial, and then great tax advantages with this. If we're using the dividends to produce income without these, again, Nuveen's 100% tax-free. BREIT is 85% tax-free. So a great tax advantage there. On the private credit side, as you've heard me talk about time and time again, this is kind of the golden moment for private credit, and they continue to perform. Scrolling down here on the year, Blackstone's private credit and Carlyle's tactical credit both up above 3%. More importantly, if we're using these investments for income, kind of that income replacement for the bonds, we're getting 10.4 and 10.37. And then our newest fund, Priority Income Fund, even though it had a down month in March, still up year to date. And then more impressively, a dividend that is paid monthly of 12.08%. This fund is what they considered a collateral loan investment. The nice thing about this is it has a long track record over 10 years, great diversification, over 2,000 loans within this fund, over 1,400 companies. So you really get to spread out the risk, and the default rate within this fund is also very, very low. So very, very happy to be adding this to the team. Again, for clients that will be using this as part of their income focus, that's a great addition to their portfolios. So I hope this was helpful. If you have any questions on this month's updates or anything else, feel free to reach out. I hope you have a great week.